Yo, what's going on, everyone? Welcome back to another video. Today's amazing 10 out of 10 quality, detailed, amazing golden nugget video is gonna be on totally forgot. Oh yeah, it was gonna be on how to make that transition from intraday trading to swing trading. Now, swing trading is pretty self-explanatory. We all know what it is, but the real definition of swing trading is when you're kind of just long-term investing. So like a good example is when you invest in stocks or crypto. Most of the times a smart investor is going to be thinking long term, right? Like you're not going to be worrying about these small little moves down because you know long term it's going to go up. So you're willing to, suffer through this downturn because you know long term it's going to go up. That's the definition of swing trading in stocks, obviously, right? Because there's not much analysis going on in stocks when you're long term investing. It's mostly just understanding the news that the company has, the fundamentals. And for crypto, it's about how good the current project is or how good the coin is. So with forex is a little different. Now with forex swing trading, there's two different types of swing trading. Now the first type of swing trading is when you have a lot of money to invest in. Like I knew a guy who had a lot of money before. I didn't know him, but a friend of a friend. He had a lot of money in his trading account, like over $1 million. He had a lot of money, and his definition of swing trading was not even doing an analysis, just entering based off where he thinks price is going long term. And so, for example, he's willing to suffer through this entire drawdown right here because he knows price is going to go up. Now, that's one definition of swing trading. I don't think it's the smartest, but if you have the money, obviously it's quick, easy money. Not quick, but it's pretty, easy money. But yeah, we don't have that type of money to, play around with. So my definition of swing trading is trying to enter at the cheapest this is a buy side example, obviously trying to enter at the cheapest price point possible and looking for a long-term hold to hold wherever price is going to go, long term. So I'll show you guys an example. So usually when you're swing trading, you don't have to start on the monthly. That's one misconception. You don't have to start off on the monthly. Swing trading isn't something that you have to stick to certain time frames. Now, my recommendation is that you should stick to the higher time frames, such as the daily 4 hour, and you don't really have to go lower than that. But that's my recommendation. But you could easily go down to the 1 hour as well. It doesn't matter. You're allowed to use any time frame you want. But the definition of swinging is when you're just entering for a long-term hold. So, for example, I'm going to go over this buy that I called out. Sorry, guys. Let me just quickly deal with this. Sorry about that. My mistake. I got a quick call by my dad. So, yeah, let me get back into this. So, basically, when you are swinging... let me go over this buy I did call out a long time ago in the Discord. We didn't actually get to catch it because confirmation wasn't there, but either way we did call this out and it did play out. So yeah, let me just go back to replay mode just about here. So the first buy that I did catch was all the way down from here. Now this one I've made so many videos on. I'm not really going to go in depth about this. I've made way too many videos on this exact setup, but let's actually move on. So after price came down and tapped into this IC, I want everyone to notice something. This IC, or this institutional candle that I just highlighted, this last bearish candle before that bullish move up, this is at the lowest price possible. What I mean by that is we all know that the banks like to buy low and sell high, right? That's just like the basics, right? That's just the basic understanding of how the banks trade. They like to buy low, sell high. Obviously there's an algorithm and stuff that we don't know of yet, but the basic understanding is they like to buy low and sell high. The way to understand wherever discounted and premium levels are is simply by understanding the higher highs and higher lows in the market. So I think it was ghost feed, was it? No, it was. Yeah, it was. So boom, if I take my ghost feed and I just make a higher high right here, with this information, I don't have much. I don't really have much information just from these candles right here. What I need to see is the market create a higher low like this. Now, when I see this higher low, what is this telling me? Well, this told me that the banks bought from here up to here. This was all buy pressure. And then from here down to here, it was sell pressure. This is where from here to here, we had sell pressure. Now, long term, we know price is going to go up. So let's say we see price do something like this. Boom. Now, what does this tell us? Well, this tells us that the sell side pressure finished over here and the buys orders the buy orders continue to push up. That means that whoever was selling over here, as smart money, hedge funds, any banks, whatever money that was being pumped into sell side pressure down to here, it was closed, and later buy orders were fulfilled, and price continued going up. So that generally gives you an overall idea that this overall area is a really cheap area to buy at, specifically because this is where the sellers finished and the buyers continue to push price up. Now, sometimes you're going to see stuff like, an institutional candle over here within this bullish movement. And that's where we can take the Fibonacci out. And, my bad. You can take your Fibonacci out and measure up the high to the low, or low to the high. And then any IC candle that's in the 70, 78, 88 is a high probable. And the one that isn't. Now, that's obviously this is just basics. I'm trying to show you guys the understanding of, discounted and premium. Now, if we go back to here, this is the same exact concept. Price was bullish from this point up to this point. We had bullish rally, straight bullish rally. Now, after we came up to this point, which was at like 152.470, price ends up selling off. Now, the sell-off finished right over here. This is that last bearish candle that finished with its sell side pressure, and then we had that bullish rally back up. Just make sure my okay, good. I thought my voice wasn't recording. Ignore that. Yeah, so that's where the sell side pressure stopped and the bullish rally continued. So we can say that this is our expansion move back up, right? And now we can implement breaks of structures and continuations of structure. So right over here we have a COS, which is a continuation of structure. This just means that price continuously broke the previous high and made a new high. So now we know that this is where price finished its sell-off, and this is where price continued its bullish pressure. That means that the cheapest possible buy area would be this institutional candle, right? Because this is that last down candle before the move up, and it gave us a COS. Now, the question comes about, how do you enter this on swings? Well, the definition of a swing is, like I said, you're trading on the higher time frames, and you're trying to catch those big moves. Now, we don't have the type of money to go through all this drawdowns. If I were to enter here for a buy, I wouldn't have the money to go through all that drawdown. I'd go through, maybe a couple minutes, and then boom, my account's margin called, and then price continues going up. So my definition of swing is we're trying to get in on the cheapest price point possible so we can avoid that drawdown. So for example, right here, after we did see price retested this cheap area, we saw another bullish rally towards the upside. And now within this bullish rally, what I did end up seeing is that we had one liquidity right over here, right? We had a ton of liquidity. We had some liquidity resting over here, which is a good sign that price needs to come back down. Now, what I also, on the 4-hour time frame, right, this is liquidity. We all can see that price has to come break past this level to grab that liquidity. But on the 4-hour time frame, what I did see is that after this bullish rally continued up, we saw this area of consolidation. Now, we don't have to get into the Wyckoff, but if you do see consolidation in a uptrend and it's followed by another major move up, just know that that is called a reaccumulation. We said this in the Wyckoff video, but let me just go over this quick time. When the market is moving in a bullish rally, right, and then you see some type of Wyckoff schematic happening or consolidation, and then you see another bullish continuation up, that entire consolidation was a reaccumulation. It's price just reaccumulating inside of this area or whatever, and then price goes up. And a distribution would be this right over here. Let's say price decides to distribute blah blah blah, and then it goes down, right? This is called a distribution, right? We see that price consolidated, but it was followed by a nice move down. But then what if we see something like this happen right after? After a deep move down, we see another consolidation and then another move back down. Well, that would be your redistribution. So if you ever see consolidation inside of a uptrend and then it's followed by another move up, it's called a reaccumulation. And if you're in, vice versa for a distribution. But that's what I saw right here. We saw that reaccumulation. And I like to keep things simple as possible. So what I said is, okay, inside of this reaccumulation, we can see that the last bearish down candle before that move up that broke structure, or rather gave us a continuation of structure, was clearly COS top, was clearly this institutional candle right over here. Make that my IC. I'm going to remove this blue zone. I hate it. It's so ugly. But yeah, so that's our last IC. So this is the last cheapest price point possible. And if you go down to I think it was the weekly time frame, right? or sorry, not the weekly, maybe it was the daily I was supposed to, yeah, so if we look at the daily time frame, we can see that this is our push up, higher low, higher high. So this is that last pullback, aka that last, you know, down candle where sell side pressure stopped and then buy side pressure continued, and now we have liquidity resting below this level. So in general, all we're really expecting is price to come back down to this area, and then we can look for our, you know, buy side pressure, and that's exactly what happened. Price came in perfectly to this IC. If we go down to the 4 hour, I think you could refine this if I'm not mistaken. Yeah, not really. I think I did refine this on like the 35, was it? I'm not too sure. Okay, let's just keep it up to here, and boom. So yeah, price tapped into this IC right here pretty nicely, and then from here we had a nice bullish move towards the upside. So now where would you hold? Well, obviously because it's a swing, you're thinking to hold it up to the next high, right? Because that's how the market is moving. We're basically just trying to catch that major move up. We're trying to avoid entering on this entire higher low, and we're looking to enter on that major higher high that the market is going to create. But sadly, you can see that GJ did end up reacting off of some IC over here, and then end up going back down. It could be potentially coming back down to retest an IC here. So let me get into that. So now we have two potential outcomes to happen. If I go back down to the daily time frame and I look at, you know, where's the cheapest price point possible, I'll probably be looking at this area right here, because this is where we had a buy pressure, sell pressure finished, buy pressure produced once again, sell pressure once again, and then buy pressure back up. Sorry about that, guys. My bad. I'm really busy today. My phone's going crazy and stuff. But yeah, so yeah, basically we had buy pressure continue from here, buy pressure finished, and then from here down to here we have a bunch of sell side pressure. Sell side pressure finished, and then from here up to here we have more buy pressure. So basically every higher high or higher low to a higher high is producing buy pressure, and every, you know, higher high to a higher low is producing sell pressure. This is that last point where the market sold down, finish this sell pressure, and then continue with that buy pressure. So in reality, the cheapest price point possible, currently speaking, would be this last institutional down candle before that move up. Obviously it's untested as well. Now another thing that I'm slowly realizing is that we're creating some type of liquidity now, right? So I'm not sure if anyone's really seen this right here, but we can kind of see that the market is creating liquidity now. This isn't the cleanest, but yeah, something like that. So that basically gives us an identification that, yeah, market kind of does need to sell down to take out this lick over here, the, you know, the money. But now obviously this is a huge zone. We can't just enter straight off of this huge 116 pip zone. So that's why we have to refine it, right? So if I were to refine it up to this last institutional down candle right here, right? And the reason I took the entire, you know, candle is because it has more wick than body, right? So yeah, that's why. And then so this is like a pretty big zone, 60 or 83 pips, right? Still really big, so we can't obviously use that. So I'd go down to the 8 hour, and obviously same thing. Let's go down to the 4 hour. And on the 4 hour we have a little bit more leeway. We can refine it up to like here. This last down candle, more candle than body, or sorry, more candle than wick, so I'd take that. Right here, this is that last bearish candle, so this is like 49 pips, which is still pretty big. We still have to refine it. Right here, refined it up to like this, which this would be like 26 pips, which isn't too bad. Go down to the 1 hour, see if we can refine this a little bit more. On the 1 hour, not much, right? We actually made it bigger by 37 pips. So basically you just have to keep going down to every single time frame and just find the cleanest institutional candle. So there we go. Now we're talking, right? So now we have that clean last down candle before the move up, and this is pretty small. This is, you know, 32 pips, not bad. Yeah, it's not bad. 31 pips is not bad at all, and you can possibly refine this even more. I usually don't like to refine it. Okay, there we go. That's clean. I would not refine it more than this. This is a really clean last down candle, 23 pips, right? Interesting is that it swept liquidity as well. So there's licks standing here. Price took out that money and then it went up. So this is a really interesting area, if I do say so myself. And this is generally where we'd be looking to buy at. Sorry. So I hope that was like an easy understanding of, you know, why I'm looking to buy all the way down over here, right? Specifically because all it was this was that last institutional down candle before that move up. It's that simple, right? And we're waiting for those deep pullbacks so we can catch those big moves up. So if I were looking to enter like right here, my stop loss would just be down at the low, and then TP would be the next high. That's it. TP would be the next high, 600 pips, right? And this is possible. A lot of people think like, okay, it's not possible, but like I showed proof that I caught this move from here. And think about how big a move this was. I only held it up to here for 421, but this continued up for 700, right? So I know it's in your head, it sounds crazy, like, okay, how are you gonna catch these crazy moves? It's really hard to catch these, right? Like, but in reality, it's not hard. You just gotta have the patience. Like, I'm not tripping out. I'm willing to wait for price to come all the way back down to here. Maybe that'll take a week, maybe a month. I'm chilling, right? Because those weeks, those months that I'm not trading, it's never more than like 2 weeks, right? But those weeks that I'm not trading, I make it all back by catching that big move up, right? And that's like one trade for the month. You don't even need to trade more after that. You could just need to catch one big trade a month and you're good. So that's generally why I like to swing, but I don't do that. I catch a lot of trades, right? I also lose a lot. That's something I want to keep in mind, is because when you do use small stop losses, you will lose a lot. That's why I'm slowly increasing my stop loss, but it's a part of the game and you can't really avoid that. So now comes the question. Someone might say, okay, why aren't you looking to buy right here, right? Because this, from here to here, we have buy pressure, right? From this point to this point, we have sell pressure. Now, the reason I wasn't too interested in buying right here is specifically because this move didn't give us a new high. This move didn't. This move over here gave us a new high. For example, right here, the market finished its sell pressure, continued with that buy pressure, created a new daily high, which is right here, and then the market came back down to retest that institutional candle at the low. And sorry, that's my bird on my shoulder, by the way, if you can hear that. Yeah, now from here we see another move. We see this major move up. Price creates an IC right here. If we measure this by the fib, by the way, you'll see that it isn't inside of the blue zone, and that's maybe why price didn't give you that major move up. That's a sign that price might make a run back down towards this area over here. Who knows, right? But if we go down to the 4-hour time frame, this area right here that a lot of people are looking to buy at, including myself, I would see this as a intraday opportunity to catch a few pips, that nothing more than a few pips. For example, when price comes down into this level, obviously stop loss is going to be crazy, because that's like, what's that, 82 pips? 82.5 pips? I'm not even sure, but yeah, that's a lot of pips right there. But I'm making a new video on this, but I'll go a little bit in depth on this now. When you do see a big move like this up happen, and you see an IC over here, just know that it will not give you that major move up. If anything, it'll move about 15 to 20 pips, maybe 30 pips, maybe 50 pips because it's GJ. Maybe it'll give us a decent move up, but it won't give you that major move up. And that's something I'm realizing now. When I used to trade without confirmation, I noticed that I didn't miss a lot of trades. I caught a lot of trades, and overall my win rate was a lot better back then, right? But the problem was that I didn't like is that I didn't have the confirmation. So one thing that I'm realizing now is when you do see something like this happen, where you see an institutional candle right here, but you also see another institutional candle at the low, the cheapest price point possible, what you should do is you should look at this area as a short-term opportunity to catch a few pips. Obviously use a smaller lot size, because this is a pretty big zone and you're gonna have to use a big stop loss. But when price does tap into this area, look for that nice drive back up, because that's how the market moves. It taps into institutional candles and it gives you a nice drive up, and then it goes back down. I'll show you guys a really good example on GBP USD. I was back testing this literally like last week. So yeah, it was this one right here. So you see a nice institutional candle right over here, right? Price create this institutional candle and then goes up. But the thing is, we had another IC down here and another one down here. So instead of looking at this area and thinking that it's going to give you that major move up, what you could have done is you could have gone down to the smaller time frame on like the 15-minute, and look for some type of consolidation. As soon as price taps into your IC, do the same thing. Look for the confirmation, but instead of looking for that break of structure and that, all you really want to look for is a change of character. So the change of character is just going to be price action changing from this downtrend into some type of bullish movement towards the upside. So for example, right here, after price tapped into our institutional candle and we saw that the market is consolidating and it's showing us some bullish structure forming, you could have entered for the buy and held it towards the next high with a stop loss, maybe down over here, which wouldn't be too bad, right? And the good thing about this is you're not really missing the move, and you're not killing yourself by waiting for confirmation every single second, right? So that's one good thing. Like another, for example, I'm waiting for GU to come all the way back down to here. Maybe it'll come down, maybe it won't, but right over here you can see that there's another IC that the market reacted off of. Look how much it reacted, about 129 pips, almost 130, and then it came back down. So really it's a good idea to look at these track effects, or sorry, TQ zones, whatever you want to call it, intraday zones. I just made that name up as a joke. It's like a meme, but yeah, so look at these zones as small term, short term little pips. Catch the small pips that you could catch from here, but then the big move most likely will happen at the cheapest price point possible. And in my opinion, the cheapest price point possible is going to be right over here on GU. And specifically because I don't want to go down to the smaller time frame too much, but this is where price pushed up, it consolidated, we had some type of liquidity here, and this wick took that liquidity. After the market took out all those lows, swept those liquidities, it pushed up and made a new high. Now this high hasn't been broken yet. You could say that this wick, broke it, made a new high, but in reality, in my opinion, not really. It needs to make a new high. Like the wick needs to close above a lot. The candle itself needs to close above. It hasn't done that, right? So from here to here, this is where there was a ton of buy pressure. From this point to this point, this is where there was a ton of sell pressure, right? Now what's interesting is over here we created liquidity right below our 4H POI. On the 4H, it's so clean. We see that IC candle that swept liquidity over here, and then we see that major move towards the upside. Liquidity resting above it, and boom, we're just expecting price to come back down into here. Now there was another IC, like I said, right here that you could have expected a nice decent retracement back off of. Now if you look at GJ, I'm expecting the same thing. I want to see GJ tap into this point of interest, and then from here you can look for a decent, maybe 150 pip move, or 50 to 100 pip moves, but then overall we're expecting it to go lower. Another example would be on Euro JPY. Right, let's go to Euro JPY quick time, and let me show you guys what I'm seeing. So on the daily time frame on Euro JPY, look at this. So this is where there's a ton of buy pressure. From this point up to this point, buy pressure. From this point up to this point, sell pressure. On Euro JPY, I think I marked up my IC on the 8 hour. Yeah, I did. We saw that this is where the sell pressure finished, and this is where we saw that major move up. Price created an IC right here that swept liquidity, pushed up, gave us a continuation of structure, and it's untested. Now we also had the same exact thing right over here on the daily time frame. We had the same thing, buy pressure up to here, and then we had sell pressure. Sell pressure finished, buy pressure continued. Price tapped into this daily IC, and it gave you a decent move up. But the thing is, we still have this possibility. There's a possibility EJ can fall down to here because there's liquidity resting here. So I'm really just sticking to the higher time frames. I'm looking at institutional candles that are at the end of a higher low, and that gave us a nice higher high right after. So after price tapped into this IC on the 4 hour, it's pretty clean. Price we have this major 4H IC. I refined it down to like the 45, I think, and we're expecting price to come down to here and give us a nice push up. If not, then obviously all we're gonna expect for or wait for is price to come all the way back down to this cheapest price point possible to take out that liquidity, and after catch that major move back up. And these moves are actually possible. I know it sounds crazy and like, oh, how do you catch these? But trust me, these moves are not hard to catch. They're really simple. It's mainly just about patience. Like for example, if you go down to the daily time frame, I'll try to find another example like right here, right? This is where the sell pressure finished, and then we can see that we broke some daily highs right here. We broke a daily lower high, which is a good indication that price is now overall moving towards the upside, right? And really what we're expecting now is price to come back down to the open of the IC that was the cause of this major move up. Now if I measure the high to the low, you can see that there's the 70, 76, or 78 and 88. Now price tapped into what? Well, it tapped perfectly into this. I think if you go on the second daily time frame, it's even cleaner. But yeah, there we go. It taps in perfectly to the daily time frame on the second day, right? And taps in perfectly and then goes up. And look at that. Like, if you really held that, you would have been up at least 2,200 pips, which is crazy, right? And these trades are not hard to catch. It's mainly about precision and patience. So that's exactly what we're doing here. We saw the IC here, we did miss it, but we're expecting price to come back down into here, maybe give us a move up. If not, price will come down to here, right? So no big issue on this. But yeah, that's generally how I swing. Let me go over a random chart that I don't trade. It's CAD CHF. I caught like one move from this trade before. I caught it one trade from this pair a long time ago. But yeah, so let me just show you guys a quick little scalping, or sorry, what's it called, a swinging example of what I would do. I'm all over the place right now. I'm a little tired, but yeah. So really, CAD CHF was overall moving in a bearish market, and it still is. On the daily, we're still, or on the weekly, we're still extremely bearish, right? But looking at the current last weeks, 1, 2, 3, we were extremely bullish. Now after price came up to this high point, right? Because remember what I said, when you're selling, you're trying to get in at the most premium price possible and then sell back down. For example, right here, you can see that this is the highest IC that price created. We created this low, lower high, lower low, and price is now inside of this area and it's consolidating. That means that long term for a swing, we're expecting CAD CHF to come back down to mitigate this institutional candle, or possibly clean up all that imbalance over here. So we know price is gonna go down long term. So now let's go on the daily time frame and let's just look at what we're expecting. Let's look at what we want to see happen. So really what we saw happen is the market created this higher low, but it didn't give us a higher high, so this isn't a higher low. It's just a range. The market is in a range from here up to here. What we want to see now is bearish structure form. If we see that clean bearish structure form breaking past this low, that'll give us enough confirmation to look for that institutional candle that was the cause of that major BOS. So instead of buying over here, we know that we're supposed to be looking for sells. So right now there's no confirmation to actually take the sell or the buy itself. But yeah, like I hope you guys get what I'm trying to say right now. But yeah, that's generally how I do swing. Long term, find your long term target. Long term target is over here, and then wait for that confirmation. Right now on CAD CHF, there's nothing clean forming. Maybe if you go down to like the 30-minute, you could find like this little scalping, or not scalping, but little zone opportunity to sell over here, depending on how you want to trade and stuff. But yeah, that's generally how I swing, and how I catch these big moves. So thank you guys so much for watching. Any questions, let me know in the Discord channel below. And yeah, have a good one. Peace.